Hello, it's a very lovely good morning from here in Delhi, and hope as always that each one of you are absolutely fine. And at the same time, needless to add that, we pray to the Almighty to keep each one of you absolutely healthy, sound, and safe. So, on such note, we start this particular session. Of course, share based payment is the topic which we are supposed to start today in this particular session, covered by what we call India's 102 or for that instance, International Financial Reporting Standard 2. Correct? So corresponding to AFRS 2 is India's 102. Now, before we delve into the issue of what exactly the share-based payments are and what exactly are the transactions which will be covered by share-based payment, there are many hunches I have seen actually. Many among us actually have this sort of impression that share based payment means the payment is being made only by way of shares. So, initially, what my point is that I would like to actually clear out the exact meaning of share based payment so that later on, when we touch upon the what we call issues of this particular standard, things become easy to assimilate. And for the same, we will take initially some what we call case studies just to clarify the point what exactly the share based payments are. Correct? So here we go and start this particular session as always. So point number one, actually this particular point is to understand what exactly the share based payments are. Correct? So let's see what exactly the share based payments are. What exactly? What exactly share based payments are? Correct? Share based share based payments are. So, what exactly the share based payments are, in order to understand and clarify the conceptuality with respect to share based payment, I'm going to pick up and put before you some what we call case study. And I'm sure actually after going through these case study, it will become a little bit easier for you to understand what exactly share based payment. I have seen that many a student actually commit lots of mistake. In fact, many among us commit lots of mistake in understanding the meaning of share based payment, number one. And number two, let me also make it clear, even though this chapter looks pretty innocuous, pretty innocent, but it is not as it seems, correct? So we need a thorough backgrounding, and for the same, I pick up a case study or some cases before you, correct? Let us say case, just I have a habit of writing case. Technically, it's an example, sort of, but anyway, case A. Here, in what I do, I stretch a line as I normally do when I need to actually make you understand some point. So here, after stretching the line, I write here E1. E1 is the entity I am referring to, correct? This entity, let us say, enters into an arrangement with a supplier. With a supplier. What sort of arrangement is that? The arrangement is that this supplier is going to supply raw materials to entity E. Raw materials. Supplier is going to supply the raw material to entity E. And as per the agreement, entity after having received the what we call raw materials shall make the payment in cash. So nothing new. So many times we have come across such transactions. We buy goods and we actually make the payment. So nothing new in it. Correct? So here you are going to pass a simple normal entry. You have purchased raw material, so your entry will be raw material account debit to cash account. I need not require to tell you. It's a simple normal accounting transaction, isn't it or not? It's a simple normal accounting transaction, and of course, later on, you are going to debit the raw material because it happens to be an expense, so you are going to debit it to your trickle, your P&L account. Anyway, so this is your entry, raw material account debit to cash account. After having going through this, now I pick up case B. Here in case B, I write what I write. This time I take entity 2. Entity T2 is entering into an arrangement or into an agreement with a party, and the name of the party is supplier. Now, this time arrangement is this, that this supplier is going to supply raw material. Sir, you took the same case in the earlier case study also. Yes. Even in this particular arrangement or agreement, supplier is going to give us raw material to entity E2. And entity E2, as per the agreement, again will make the payment in cash. Still up to this point, there is hardly any difference between the previous case study and this one, isn't it? However, this time the agreement also states that whatever payment we are going to make you, whatever payment entity E2 will make you in cash, that payment will be based upon the current prices of the equity instruments of entity E2. So this time, the agreement states that entity E2, after having received what we call raw material, shall make the payment in cash, but how much payment shall be made in cash, that will be decided by the current prices of the equity instrument. Equity instrument, for at this particular moment, you simply take equity share capital, correct? So that will be based upon the current prices of the equity instruments of entity A2. So this time there is some addition to the what we call contract. The payment of cash shall be based upon shall be based upon the current prices shall be based upon the current prices of shall be based upon the current prices of equity instruments of equity instruments. Once I will write in full, equity instruments, EI. Henceforth I will write simply EI. Correct? Of E2. So this time agreement states that we are going to make the payment by way of cash, but how much cash we are going to pay you, that will depend upon the current price of the equity instruments. So this time, this particular transaction is not a normal accounting transaction. This particular transaction will be covered by Ind AS 102, or for that instance IFRS 1002. 102. Is it clear to you? IFRS 2 or Ind AS 102, sorry. So that means this transaction will be covered by IFRS 2. Whenever I will write IFRS 2, it means Ind AS 102, and it also means under share based payment. Correct? This is a transaction which will be covered by what we call share based payment transaction. So, first point which you need to eradicate, wipe out from your heads and your what we call impressions in mind, that share based payment doesn't mean that payment is only by way of what we call shares. Payment could be, as we will see later on, payment could be in cash, payment could be in any other asset, payment could be by way of shares also. But besides share, we can make the payment in cash and in any other asset. But the important point is that whatever is your mode of payment, that mode of payment must depend upon the what we call current price of the equity instruments. That is the important. So unless and until the component of the consideration will be based upon the what we call current prices of the equity instruments of the entity, that particular transaction will not fall under Ind AS 2. But if it is based upon the current price of the equity instruments, then it will be covered by Ind AS 102, or for that is IFRS 2. I hope now you have got a pretty good idea what exactly the share based payment are, but still we will continue with some more cases. Case C now I come over to. Correct? Now, in this particular case, of course, now I'm going to write entity E3. Now, this time there is another entity by the name of E3, and this entity E3 enters into an agreement, this time with an employee. This time with an employee, correct? The employees, when I'm saying employee, that means this person is working with this organization. What sort of agreement? Agreement is that this employee, this employee, this employee actually, when I'm saying employee, that means this particular employee is working with this particular organization. And in this particular organization, try to understand this particular point. Actually, there is a call which is giving me a little bit of botheration. So anyway, employee is working with this particular organization, entity E3, and there is an agreement between these two parties that this employee will supply technical services, or say some know-how, technical know-how which will be quite helpful to the entity E3. So there is an arrangement or agreement with the employee, this employee, that you supply us technical know-how, and against that we are going to make you some payment. And let us say, as per the agreement, once again the payment is by way of cash, but once again this payment shall be based upon, as I said earlier, as per the agreement, how much cash we are going to give you shall be decided by the current prices. That means it will be based upon current prices, based upon current prices of equity instruments of the group, equity instruments of the group, equity instruments of the group. Now you must have seen bit of difference. In this case study, I told you that this cash payment will be decided upon the current prices of the equity instruments of this entity itself. And I told you, when payment is based upon the current prices of the equity instruments of the entity, it will be covered by the what we call share-based payment. It will be covered by IFRS 2 or Ind AS 102. But this time I have a little bit more what we call twist in the tail. As per the agreement, employee is supplying what we call technical services. We are making the payment by way of cash, but this cash payment is based upon the current prices of the equity instruments of the group. I have written of the group means of the group to which E2 belongs. To which E2 belongs. To which E2 belongs. Now, I'm putting up a broader view before you. Any transaction will be covered by IFRS 2 and Ind AS 102, provided the mode of payment, which could be either in cash, which could be either in assets besides cash, or which could be either in equity instruments. Important thing is that that mode of payment must be based upon the current prices of the equity instrument of the entity itself, or it could be based upon the equity instruments of the entity, equity instruments of the group to which this entity belongs to. Are you getting my point or not? That means the mode of payment could depend upon the current prices of the equity instrument of the entity itself or of the group to which the entity belongs to. So that transaction will be covered by what we call IFRS 2. So again, this particular transaction shall be covered by Ind AS 102 or IFRS 2. Are you getting my point or not? So these things must be absolutely clear in the beginning stages itself. Now, I will still stress this discussion further. This is my sheet number 2. For my reference, I'm writing. D. Here, once again, I put before you a case wherein an entity E4 has entered into an agreement with one of its employees. And this employee is very calibered employee. He's very hardworking, very dedicated employee. And demand of this employee in the market is pretty high. And there are many other rival firms in the market who are running after what we call this particular employee. And but fortunately, this particular employee is employed with us. I just told you a moment ago that this employee is very dedicated, very resolute person, very honest person. His integrity is incredible and is a very knowledgeable person. So no entity in the world would like to see to it that this employee should cease the what we call relationship with the organization. There are many employees in the what we call organization when entity feels that their services are of paramount importance, correct? So we quite obviously won't be what we call very much inclined over the fact that this employee should leave us. So in order to make him stay in the organization, sometime what entity does, entity lures them, entity attracts them, entity puts a bait before them that you stay in the organization for a specific period of time at least. Then after having completed that specified period of service, we are going to allot you some equity instrument. Are you getting my point or not? So this is a normal general tendency which is also adopted by the organization and even in India. In fact, Infosys was the first Indian company to what we call come out with such schemes. So this entity this time enters into an agreement with the employee. Exactly is the what we call agreement? Agreement is that you stay in the organization. That means you serve the organization. You serve the organization, let us say, for 3 years at least. Serve the organization for 3 years. At least for 3 years, you stay with us. And once this particular period, 3 years of period, will get over or expired, then after that, we will issue you equity instrument. This time, consideration is being paid by way of equity instruments. So mode of payment could be in cash. It could be by way of assets. It could be by way of equity instruments. So this time, entity E4 has told to the employee that we are going to give you the consideration for the fact that you are going to stay with us at least for a 3 years of period of time. So after that, we will issue you equity instruments, but these equity instruments will be issued on the basis of current prices, on the basis of current prices, on the basis of current prices, on the basis of current prices of E2, or of the group, or of the group to which E2 belongs. So that means the mode of payment could be based upon the equity instruments of the entity itself, or it could be based upon the current prices of the equity instruments of the group to which the entity belongs. Correct? So then only such transaction will be covered by what we call this particular standard. So I hope you got a fair bit of idea now that what sort of transaction will fall under this particular standard. Number one, it is very important, and second to what exactly the share-based payments are. So under share-based payment, it is not a necessity that the payment should be by way of shares or equity instruments only. It could be by way of what we call either cash, asset, or as I said, equity instruments, shares, etc. But the important point is that whatever may be the mode of payment, that payment must be based upon the current prices of the equity instrument of either the entity itself or of the group to which this particular entity belongs to. So after having acquainted ourselves what exactly share-based payments are, then we try to move over to what we call next part, that is share-based payment arrangements. Share-based payment arrangement. Share-based payment. Share-based payments arrangements. Share-based payment arrangements. SBA. Share-based payment arrangements. Correct? Actually, I have already talked about indirectly what exactly the share-based payment arrangements are, but still I will write share-based payment arrangements, SBA. You can say is an arrangement. Whenever I will use the word arrangement, because standard uses the word arrangement, you read it as agreement. Is an arrangement. It could be an arrangement between. It could be an arrangement between entity, entity and other party. Remember one thing, whenever I would write other party basically stands for third party, and third party basically stands for suppliers, manufacturers, traders, employees, correct? So it could be an arrangement between entity and the other party, or it could be an agreement between, or it could be an arrangement between entity of the group, entity of the group, entity of the group, and other party. So it could be an arrangement between the entity and the other party, or it could be an arrangement between an entity of the group and the other party. Other party, correct? Or it could be an arrangement between any shareholder, any shareholder of an entity, of an entity and other party. The important point is that first of all, you must understand that this arrangement could take place between entity and the other party, or it could take place between an entity of the group and the other party, or it could take place between any shareholder of the entity or of the group and the other party. Now, as per this agreement, what happens? That that entitles, that entitles the other party, that entitles the other party, that entitles the other party, because this arrangement has taken place between the entity and the other party, correct? So obviously, other party must have either supplied some what we call goods or services to us. For the same, definitely we are supposed to what we call pay them. So that entitles them to receive what? To receive cash or assets or equity instruments or equity instruments or equity instruments of the entity, equity instruments of the entity or of the group, or of the group to which entity belongs, to which entity belongs, just wait, entity belongs, so that means other party will receive either cash or assets or equity instruments. But important thing is that whatever is your mode of payment should be based upon based upon current prices of equity instruments, of equity instruments, of equity instruments of the entity or of the group, of the entity or group. Sheet is coming to an end, that is why I'm stretching it here. So this is your share based payment arrangement. What is share based payment arrangement? It is an arrangement between two parties, entity or other party, or entity of the group or other party, or what we call any shareholder of the entity or of the group and the other party, which entitles the other party to receive what we call mode of payment, which is based upon what we call current prices of the equity instruments of the entity or of the group. So this is as simple as that, not very tough. So share based payment arrangement we have taken a look over. Now we shall come over to an important aspect, what exactly this important aspect are. But before I move over to that particular important aspect, I feel that I should clarify the point which I just wrote. I wrote it is an arrangement between entity and other party, correct? While writing the share based payment arrangement, I wrote it is an arrangement between entity. Entity, let us say there is an entity. and there is other party. Other party, I'm simply writing OP, or okay, other party, I will write other party. So it could be an arrangement between the entity or other party. Arrangement could be of anything, that we will receive services or we will receive goods and services and we are going to make the payment, but the important thing, that payment should be based upon the current prices of the equity instrument. Then I wrote it is an arrangement between an entity of the group. What does it mean? Let us say there is a parent company, correct? And this parent company has two subsidiaries. This parent has two subsidiaries, S1 and S2. And these three parties combinedly will be called as a group. Are you getting my point or not? Combinedly, these entire structure will be known as a group. So let us say S2 enters into an arrangement. So it could be an arrangement between an entity of the group and other party. Correct? S2, let us say, enters into an arrangement with other party that you supply us goods and services and we will make you the payment in cash, assets, or what we call equity instruments, which will be based upon the current prices. Then it is a share-based payment transaction and share-based payment arrangement. Then I wrote any shareholder. Let us say P1 is a parent company and it has got, let us say, two subsidiaries, S1 and S2. Now this is a group. Any shareholder any shareholder of this entity or this entity or this entity, any shareholder of the entity or of the group can also have what we call a share based payment arrangement. Let us say one shareholder of this entity enters into an arrangement with other party, then it is a share based payment arrangement, provided as per the agreement the payment will be made by way of cash, assets, or equity instrument, but which will be very importantly based upon the current prices of the equity instruments. So this is the meaning which I try to actually make you understand. Correct? Okay. Now we come over to a case study. To call it case study. Just let me see how much you have picked up. Let us say issues a parent issues share options to the employees of its subsidiary company. A parent issues share option to the employees of its subsidiary company based based on the prices based on the prices of shares of parent. Question is, can this transaction be included under IFRS 2 or Ind AS 102 or not? First of all, what exactly is the question? There is a parent. This is a parent company. Let us say the name of the parent company is P1. This time, this parent is issuing shares to employees of the subsidiaries. Employees of subsidiaries. This parent is issuing shares employees of subsidiaries. Correct? So, of course, payment will be based upon the current prices. So, yes, then this particular transaction will fall under IFRS 2 or Ind AS 102. This transaction will be included. Correct? Let us say Important thing is that any transaction will be covered by this particular standard if, as I told you, the payment is in cash, asset, or equity instrument, but it is based upon the current prices of the equity instruments of the entity or of the group. Case study 2. A subsidiary. A subsidiary issues share options to its employees based on the prices based on the prices of shares of parent. You should be in a position to deliver me the answer if I am going to put the question before you, that should this transaction be included under what we call IFRS 2 or not. A subsidiary issues share option to the employees. Now this time, in the last one it was parent, this time let us say S1 subsidiary is issuing share option to its own employees, to the employees of S1. S1 subsidiary company is issuing shares to what we call employees of S1 because of the fact or because of any other reason. Let us say these employees might be giving us some technical know-how, or there is an arrangement that you will serve the organization for a particular period of time. Whatever may be the reason, we will make you the payment. But this time, as per the agreement, the payment will be made by way of equity instruments, but the equity instrument will be based upon the current prices of the parent. So I've already told you that equity instrument, whatever mode of payment is there, that should be based upon the current prices, either of the current prices of the equity instruments, either of the entity itself or of the group to which the entity belongs to. So again, this particular transaction will be covered by IFRS 2. Correct? So these things you should be absolutely aware of. Now, after having a look over these facets, now we move over to next part, that is share based payment transaction. First of all, there must be an arrangement. Unless and until an arrangement will take place, transaction can never ever take place. Are you getting my point or not? Suppose there is an agreement between you and I, correct? That you will buy my course for this much of price and I'm going to make you the what we call availability of the course. First, let us say there is an agreement. But in real terms, when I will deliver the course and receive the payment, this transaction could take place only once we shall have the agreement. Are you getting my point or not? So similar to here, once the share based arrangement has taken place, that we will receive the goods and services and make the payment, then the transaction takes place. So share based payment transaction. So what is share based payment transaction? Share based payment transactions. Share based payment transactions. SBPT, share based payment transaction. Simple. It is a transaction in which one party will receive goods and services, and at the same time, that party will incur an obligation to make the payment. Correct? So, share based payment transaction is a transaction is a transaction in which a entity receives goods or services from other party, I told you, could be a supplier, could be a manufacturer, could be a trader, could be an employee. From other party, and B. Incurs an obligation. Incurs an obligation. What is the obligation? Obligation is that you are going to settle the transaction. Incurs an obligation to settle the transaction. Settle the transaction in cash or assets or equity instruments based upon, it is important, based upon current prices, based upon current prices of the entity or of the group to which entity belongs to. Entity belongs to. Correct? This is how what we call share-based payment transaction is all about. I need not require to actually tell anything because we have already talked at length regarding this. Correct? Now, the next point which I am going to put before you is that point number 4. Some features. Some features means some features or special points with respect to share-based payment transaction. Share-based payment arrangement should be formed, correct, with an agreement between entity and other party. This is the foremost thing. Share-based payment share-based payment share-based payment transactions should be formed with an agreement between between entity and other party. Of course, without that, transaction cannot take place. It goes without saying. Indirectly, it means indirectly, it means terms and conditions, terms and conditions, terms and conditions should be clearly communicated, should be clearly, should be clearly communicated. And I have already told you, in fact, all these points I have already discussed, no doubt about that. Share-based payment, share-based payment transactions should be for goods and services, for goods and services w- with an external party. With an external party. What does it mean? External party means parties outside the purview of entity itself. External parties. I have already told you external parties includes, that is, suppliers, traders, manufacturers, employees, etc. So share-based payment transaction should be with an external party. Just to make the point clear, this is our case study 3. E1 is initiating a plan to provide equity instruments to its employees, but there is there are, you right, some terms, but there are some terms, but there are some terms that are yet to be communicated, yet to be communicated. So can this transaction fall under IFRS 2? No, this particular transaction will not fall because, as I told you, under special features, the terms and condition must be clearly communicated. So transaction will not fall under IFRS 2. Not fall. Why? Terms and condition haven't yet been communicated. Correct. So in this session, we'll finish till up to this particular point, and needless to add that in the upcoming session, we are going to touch upon many more.